Right, it's time for business, and Emmanuel Abajiriafe has joined me. Good evening to you,
Hey, good evening. How are you?
I'm well.
You've been missing in action.
Well, yeah, I was away for a while, but I'm
All
back.
right. Good to see you back.
Yeah, good to see you too. Right, what's coming up in business?
Well, in business, the top story is that there are challenges in the economy, or the challenges that the economy is currently witnessing is really threatening investments into the country through the capital market, the local capital markets, and that's quite unfortunate.
But it doesn't have anything to do with the fact that we're going into an election and
no, not this time.
Not this time.
Not this time.
All right, you bring us the details.
All right, thank you very much, and thanks for being with me on Business News. Challenges with the cedi's stability is the biggest threat to attracting more investments into the country, especially through government bonds. That's the view of Chief Investment Strategist of Standard Chartered Bank, Steve Bruce. The country's bond treasury and stock market has in recent times witnessed some interest by foreign investors. However, some challenges in the economy and the business environment appear to be threatening this interest. But visiting Chief Investment Strategist says there's a way out of if more attention is given to the monetary space.
It doesn't weaken too much. They're not inconsistent. It is a risk, but it's usually not the way things happen, because usually central banks only start cutting rates when they're pretty convinced that that's not going to happen. Now, of course, they can make an error, or external events can happen in a way that you didn't foresee, and that changes the dynamics. Of course, it's possible, but usually. When you start seeing rate cuts in these types of markets, you see them, they're serially correlated, because actually, I mean, to the implied point, I think if you see interest rates cutting, then actually you can attract, as long as it's credible cutting, it's not done when inflation is still soaring and etc. Then people like go, okay, the bond market's interesting, the equity market might be interesting, so you do see money coming back to those markets, and that can then help the currency. My general sense is that the currency and the interest rates are negatively correlated, i.e. if interest rates are being cut, the currency is probably strengthening.
And in a related development, the Standard Chartered Bank is forecasting about $75 a barrel for the price of crude oil. He was of the view that the bank was of the view that diversifying the economy could ensure the country benefits from this increase. Now, moving on, Ghana, Stanbic Bank Ghana is urging financial institutions to provide a variety of tailor-made services to individuals with assets worth at least $1 million of its associated benefits to the economy. The bank has, in this light, set up a wealth and investment unit to cater for the needs of such high net worth clients. There's more in this report.
Statistics show that in 2000, only 500 individuals were worth $1 million and above in Ghana. As of 2015, this had increased by over 5 times to about 2,700, and this is said to be the highest growth in sub-Saharan Africa by far. Head of the Wealth and Investment Division at Stanbic Bank, Benjamin Mensah, says this has primarily informed their decision to establish a wealth and investment unit. He explains to Joy Business their value proposition goes beyond banking solutions.
Not a lot of banks in Ghana have set up such units that look at that segment of the market. I've done, and I think we're taking a leap where it's having a view of the client's long-term needs. Okay, having a view of preserving the client's earnings over time, or his wealth over time. Have a view of helping the clients to build more wealth. It has a view of helping the client have a lifestyle that befits their status, and it has a view of ensuring that that client leaves a legacy. One, to his kids or next of kin, and also to society. And that construct we call the wealth quotient, or our wealth philosophy.
But couldn't the new unit only be a duplication of the Stanbic's investment banking arm, Stanlib? Absolutely no, is the answer from Mr. Mensah, explaining the two rather strategically complement each other to the benefit of the economy at large.
So if a client comes and we have a conversation around asset management, that conversation is now taken to Stanlib. You understand? So we're not in competition. We will refer that, so the conversation with the technical experts will now be with Stanlib. If that client now wants to look at diversifying their portfolio, looking at options abroad or offshore, then we have, again, another boutique asset management house called Melvin Douglas, which is, again, wholly owned by the bank. So they, again, now come in with their solutions. So we try and present a one-stop shop to the client.
So at the end of the day, what benefits to the economy?
One is, if you're now able to help this segment, one, to continue to build more wealth, obviously that's adding to the economy. These guys can expand their businesses, they can employ more people, and so on. So the ripple effect comes across. If you now look at the sort of legacy side, and through us, we're now going to put in the right structures to help them to support society. That is, and the economy, again, as a whole benefits. If you look at the whole issue of, again, intergenerational transfer of wealth, you can see the multiplier effect.
This makes Stanbic Bank Ghana the latest in the Standard Bank Group to add wealth and investment unit as a third arm of operations after similar moves by subsidiaries in South Africa and Nigeria, among others.
The level of non-performing loans is still going up significantly despite government's decision to clear a fraction of the energy sector debts. That's the impression one may draw after going through the third quarter result of some listed banks. Economist and bank analyst Patrick Stevenson shared his thoughts on Business Live.
Well, significantly, I mean, if you look at the indicators that goes into the determination of the cost of borrowing, I mean, you have things like default risk that have to be taken into consideration. You have what the going monetary rate risk, which is equally filtered into the base rate of the bank. You equally have a concern regarding liquidity risk as well. But ultimately, the decision comes to demand and supply of funds. What are the total volume of funds that are available, and what's the demand for these funds? And so in a case where these monies are not being unlocked from the government side through any sort of arrangement, clearly there's a supply constriction on funds. If you have to balance that against the ever-increasing demand for finance by SMEs and businesses within the economy, clearly a pressure is placed on the lending rate. And so to directly correlate with the pressures you have seen in the non-performing loan ratios of banks, if you look at the trends we have in the lending rate as well, the average lending rate that has been reported by Bank of Ghana has also consistently increased. Currently it sits around 33.2%. And that clearly is an indication that cost of credit has gone up for both businesses and even for government itself, because if you look at the government's own issues, the 680 that is issued over the last 3 quarters, the short-term instruments, i.e. the 91 bills, have had lower rates.
The Chamber of Mines has hailed the relocation of illegal miners from the AngloGold Obuasi mine concession as a positive development for the economy. The Minerals Commission last month started the evacuation process towards regularizing the operations of the illegal miners. The miners initially resisted the move, especially following the deployment of a joint military and police force, but have now agreed to relocate to a newly designated site. Chief Executive of the Chamber of Mines, Suleiman Koni, tells Joy Business this couldn't have come at a better time.
It is the way to go if they would comply with all the regulations which would make them be recognized as small-scale miners. Why not? In any case, the company has actually relinquished that portion of its concession to government. The government has every right to reallocate. We collaborated with government. We actually served on the movement committee when we had an invitation from government to serve on the committee. We said, why not? We are here to help resolve issues pertaining to the mining industry. And although we were hurt, we collaborated with government. And therefore, to know that this is happening is a good thing for us, but we should just make sure that it doesn't happen again in our industry, because sometimes when you retreat, the tendency is to give people the impression that you always would want to pander to people's whims and caprices, and it's not too good.
The Executive Director of the Investment House Data Bank, Reverend Daniel Ugbami Tete, has emphasized the need for individuals to invest more in times like these. Many people are still struggling to come to terms with the current economic environment and have become undecided whether to invest, save, or keep their monies at home. But Mr. Reverend Ugbami Tete said in times like these, savings and investments is the best.
If you're expecting a bright future, then you cannot put investment on hold, because when you are investing, what you are effectively doing is that you are paying the future. I hear people say, oh, I'm expecting a bright future, but the question is, how are you influencing that future? And the way to do that is when you put part of the income that comes into your hands away, and not just stacking away in a savings account or hiding it somewhere at home, but putting it in a vehicle that can grow. Because like we like telling people, money can work. Money is a potential employee. So put it to work against your future. So I'll tell such people, whether it has to do with the economic environment, whether it has to do with the elections or whatever, the question is, do you still expect a bright tomorrow, a bright future? Because investing is effectively paying for the future. And I want to pay for the future. I want to buy my future by influencing it through my investment habit. So.
And on that note, we wrap up business for tonight. Thank you very much for watching. My name is Emmanuel Abuaji. There's more ahead. Don't go away.